All right, today we're going to break down a professional framework for one of the absolute fastest forms of trading out there, scalping. And we're not just talking about the general idea, no. We're diving deep into a very specific, high probability strategy that the pros use to find their edge in all that intraday noise. So, what even is scalping? Well, think of it as sitting at the very peak of the short term trading pyramid. A day trader might hold on to a position for a few hours. A scalper, they're working on a micro level. We're talking minutes, sometimes even seconds. The whole game is about capturing these small, repeatable, high probability moves, and that's exactly what we're going to detail right now. Okay, so here's our game plan. We'll kick things off by really understanding the scalper's world. Then we're going to build the exact chart setup you need, piece by piece. After that, we'll hunt for the specific event that triggers the whole thing, and I'll walk you through the execution. And then, and this is key, we'll learn how to tell the difference between a quick scalp and a much bigger trade. To finish, we'll talk about the pro mindset that makes it all work. So, first up, the scalper's apex. We're really zooming in here on the fastest type of trading there is. This is a world where knowing your probabilities and having razor-sharp precision, well, it's everything. Now, let's get our hands dirty and build the setup. Every professional needs the right tools for the job. And for this strategy, there are 3 essential, non-negotiable parts to building our chart. And here they are. This is basically our toolkit. First, we need a specific time frame. This is going to be our canvas. Then, we need a short-term trend guide, which helps us see what's happening right now. And finally, a long-term context guide, so we don't lose sight of the bigger picture. So let's build this thing out one piece at a time. Okay, step 1. The foundation, our canvas, is the 2-minute chart. Now, why 2 minutes? Because it gives us this perfect, high-resolution picture we need to spot those sharp, powerful moves that scalpers live for. Yeah, a 5-minute chart can work, but the 2-minute, it just gives us that extra bit of clarity. Next up, we layer on our short-term trend guide, the 20-period simple moving average. Its job, really, is to keep us honest. See how it kind of smooths everything out? If that blue line is pointing down, guess what? The immediate trend is down. I don't care if you see a few green candles pop up, the guide tells the truth. It just cuts right through all that market noise. And for our final piece, we add the 200-period SMA. This gives us that critical long-term context. And this is so important. You should never use a moving average by itself. It's like a buddy system. You got your short-term guide and your long-term guide, and together they give you the complete picture. Honestly, a chart just isn't viable without both of them working together. So, our chart is set up, it's ready to go. Now let's talk about the specific event, the trigger that kicks this whole strategy into gear. And the key word here is reacting. We are not trying to be fortune tellers. The catalyst is something called a strong move. It's just a sharp, really fluid push down or up, just like you see highlighted here. When this happens, it creates a temporary imbalance in the market. Now remember, our job isn't to predict that this will happen. Our job is to see it happen and then react, playing the statistical odds of what comes next. And this is where the magic happens. This is where the strategy gets its statistical power. Okay, so after a stock drops 100%, what are the chances it's going to bounce all the way back up to the top immediately? Pretty low, like 1 out of 10 times. But what are the odds it bounces back just a little bit, say 25%? Turns out those odds are extremely high. And that, right there, is the professional's edge. So let's put a number on it. The crucial, absolutely critical point is this. A 25% retracement happens 9 out of 10 times. That is a 90% probability. This isn't a hunch, it's not a guess, it's a statistical tendency that we can build a strategy around. This is the professional's play. All right, now that we have that core probability just locked into our brains, let's get into the nitty-gritty. How do we actually execute this thing to capture that bounce that's so likely to happen? The execution is actually really straightforward. Once you see that strong drop, the play is to step in and buy against that downward flow. Now, you're not trying to be a hero here. You're not trying to catch the absolute bottom tick. Nope. You are simply trying to capture that super probable 25% bounce. You get in, you set your target, and you collect your small win. And you're right 9 out of 10 times. But you might be asking, why get out so fast? Why not hold on for a bigger gain? Great question. It's because that 25% target is also a defensive move. The stats show that when a bounce is kind of weak, meaning it fails to get back at least half of what it just lost, the odds are very high that the sellers will take control again and push the price to a new low. The scalp gets you in and out before that's likely to happen. Okay, but check this out. This is where the strategy gets really elegant. That same piece of information that tells us when to get out of a quick scalp can also be a huge alert for a much bigger opportunity. We're about to learn the critical difference between a scalp and a real trade. And this slide just lays it out perfectly. It's like a decision tree. It all boils down to how strong that first bounce is. If the bounce is weak, less than 50% of the drop, there's a high probability of a new low coming. That's our scalp. But if that bounce pushes past the 50% mark, the whole probability map shifts. A new low is now unlikely. And that sets up a totally different opportunity, a trade. When price blasts through that 50% level, it's like a signal flare goes off. It tells you the whole character of the trend has just changed. The sellers have lost control, and this creates a fantastic entry point for a longer hold. The strategy is now to wait for the very first pullback after that strong bounce, and you buy into that newfound strength for a potentially much larger move. And this little playbook here just sums it all up, doesn't it? The scalp is a counter-trend stab with a strict 25% target. The trade is a pro-trend move, but it's only triggered after a bounce of more than 50%, and it has a much higher reward potential. See? Two totally different opportunities, and they're both identified by one single critical level. Okay, let's bring it all home by shifting from the nuts and bolts to the professional mindset. Because being able to execute this over and over, well, it takes a certain kind of rhythm and discipline. This quote, man, it just says it all. Professional trading isn't about hitting one massive home run. It's about a rhythm. It's about applying your statistical edge again and again. You're constantly reading the bounce. Is it a 25% scalp or is it a 50% plus trade setup? That's the daily process. That's how you build real consistency.